to our first guest on the show, CMS Infosystems. They reported a good set of numbers. We have with us Mr. Raghavan, who is the president of the cash management business at CMS Infosystems. Hi, good morning. Thanks so much for joining. And well, your business points are up close to around 10%. What kind of expansion do you expect for this year?
Good morning, Nigel. Good morning, Mangalam. Thank you for having us on the show. I think it was a good quarter for us overall, Nigel. We grew revenue by about 13% year-on-year basis. Our EBITDA grew by 19% and our profits after tax grew by 22%. That's on the back of, this sort of was a record quarter for us because we managed to grow our profits by a double-digit number for 10 consecutive quarters. Our cash business has shown very strong performance as well. The underlying business points have grown by 10%, aided by a robust cash usage in the country. Cash usage or cash throughputs to the CMS network has increased by 6% year-on-year, primarily driven by growth in metros. Historically, the CMS growth has been on the back of an increasing ATM network and incremental outsourcing. Going forward, however, for the next mid to long term, we foresee very strong growth drivers coming in from retail. Post-COVID, there has been a good recovery and expansion of retail network in the country. Based on what we've read from spoken with a lot of different retailers, there are aggressive expansion plans for them to increase their footprint, particularly in tier 3, 4, and 5 areas. We believe that, along with an increase in consumption, will act as some very good drivers of our growth.
All right, so let's talk about a couple of other data points then. The first thing I wanted to know is that what is your current market share? How many data points did you add? How many cash management points did you add in the first quarter? I remember you were looking at an aspirational market share of close to around 60% the same time last year. This number stood at 46%. And the same time last year, you had about 115,000 cash units. Where does that number stand at? Where does the market share number stand at right now?
Sure. On the overall business points, Mangalam, we are currently at about 126,000. So our year-on-year business points have expanded by 10%. This is a combination of incremental ATM and deployment and ATM outsourcing, but also very strong performance on the retail network. From a market share perspective, when we look at our revenue share, again, different businesses of CMS will have different market shares. Our ATM market share will be very close to 50%. But when I look at the overall split of revenue share across ATM, retail, as well as work that we do directly with the banks on the currency chest and the CIT outsourcing, that number should be a little bit north of 40%.
All right. And by when do you get to the aspired 60% mark?
Well, it's a consolidating market. There is still a lot of business which the banks do themselves, which needs to be outsourced. If we just take the ATM network, for example, there are between the 2.5 to 2.6 lakh ATMs that are in the country. Near about 90,000 to 1 lakh ATMs are still being serviced by the banks themselves. This number has been sort of gradually shifting in the favor of outsourcing because with the implementation of compliance and regulatory norms, the banks find it a lot more amenable to outsource this to players such as CMS. In fact, speaking about compliance and regulatory norms, one of the key developments in the ATM sector for the last year or so has been about the implementation of cassette swap. In this quarter, we've had a big step forward. There has been a consensus and agreement on implementation of cassette swap for all ATMs in the country. So in an agreement driven between the banks, the IBA, as well as cash companies, we expect to cover almost 40% of ATMs today by end of this fiscal into the cassette swap model.
All right, Anush, just want to understand, this 2,000 rupee note, there's going to be a restriction coming up in the next couple of months. How does it impact your business?
So if you look at the 2000s, Nigel, on the ATM business, the impact has been quite negligible because a very small set of ATMs were configured to dispense 2000s as of early this year, just before the change came into effect. The impact on Q1, however, has been that as people have returned the 2000s, many of them have also chosen to just spend this money. As a result of which, if you look at the Reserve Bank of India data, it shows that there has been a dip in the overall ATM transactions by 3 to 4% in this quarter. So obviously that has impacted ATM usage in Q1 to a certain extent. But as the RBI governor also told us, almost 80% of the currency notes are back with the central bank. So we think this situation should normalize from Q2 onwards. Going forward, we just think that, with most of the spending and consumption happening between 100 to 500 denomination, it should just help consumption because it's a lot more convenient to use those currencies.
Right. And what about digital? The rise of digital payments and the reduction in usage of cash, so to say, for overall purchase, daily purchase. How does that impact your overall business? I mean, are you looking to diversify away from cash? I remember you saying that you want to get a lower share of revenue coming in from cash management going forward. It stands at 67% right now.
So we are at 65% actually in terms of the contribution of cash to the overall business. When I look at our FY25, so we had this 4-year goal of expanding our revenues, doubling it from FY25 through FY21 through FY25, from 1,300 crores to 2,600 crores. At that FY25 level, we think the cash business contribution should be very similar because there's some very strong fundamental tailwinds helping the growth of the cash business. And as we've seen, just 2 months back, we had our annual investor conference, and we used an opportunity to publish a cash vibrancy report, which tries to put together a lot of the data that we see in our system, in our ecosystem, in terms of what's happening to currency and its usage. And that shows that there are some very strong fundamental reasons for currency to continue to grow. It is fundamentally aided by the fact that when we talk of cash or currency, we're only really talking about the formalized economy. And as banking system is growing and doing very well, as lending increases and as consumption increases, and as the growth of retail increases, and we are further spreading into tier 4 and 5, 6 locations, for a lot of the people, cash and currency is sort of in the first port of call to be able, in terms of spending and consumption.
Okay. All right. Anush, I wanted to ask you about this revenue target that you've put out. I think you're looking at around 3,500 crores plus in the next couple of years. So 2-part question. One is, how does the business shape up between the cash management business? What is the revenue split out there? And will there be some inorganic growth that you're looking at? Because as of the last year, you did little less than 2,000 crores.
Sure. So, Nigel, there are two numbers really, right? By FY25, which is, in that 2-year period, our goal is to get to 2,600 crores. In the last investor conference that we had, we did share with people that we would like to have an aspirational range of between 3,400 to 3,800, but that's only by FY27. So in getting to this 2,600 number, that's where 85% of our time and the management effort is really focused right now. That's all purely organic. That's all a function of, if you see the last 2 years' performance, we've grown revenues by 20% year on year for 2 years now. The getting to the 2,600 numbers over a 4-year period implies roughly an 18% growth rate. So I think given where we are and the visibility that we have, we feel fairly confident of being able to grow and expand our businesses and focus on our service quality and uptimes to be able to deliver that revenue.
Okay. And what about the business split between cash management services and managed services?
In this 2-year period, we think it'll be very similar to where we are today. So cash is today about 65% of the overall revenue contribution. By FY25, it could be in the 63 to 65%. If I take a slightly longer term view and I look at FY27, I suspect then it will be closer to 58 to 60% of our overall revenues.
All right, that makes sense then. Just a word on your managed service business. I mean, the first quarter got around 150 crores worth new business. Is this a run rate that is likely to sustain going forward? And what's the ideal run rate according to you as per the growth path that you have?
Mangalam, if you look at it, the managed service business had built a very strong, robust order book of about 2,000 crores, 1,800 to 2,000 crores at the time of our going to IPO, which is about 18 months back. From then to now, we've been able to grow this to currently about 3,300 crores. So that's sort of how we've been able to accrue new wins and build our order book in that period. The growth of managed service is really a function of two things. As banks want to incrementally outsource greater number of services. So this includes, outsourcing broader parts of the ATM ecosystem. A lot of the public sector banks today do not do end-to-end ATM outsourcing. And the second part of the business is around remote monitoring and the AI-based remote monitoring that we do. A lot of the bank branches and NBFC branches today still do not have remote AI-based monitoring. As we stand today, CMS is the market leader in the ATM remote monitoring space. We are using FY24 and FY25 to expand our service offerings to cover bank branches and NBFC branches. So as some of those deals come into fruition and as those RFP pipelines get awarded, we suspect that should lead to incremental outsourcing. And, if we're able to win some of those, that will help our order book.
All right. We will take 150 crore as the base case then going forward as you expand upon that. Thanks a lot, Anush, for joining in and giving us your outlook for this business. Wish you good luck for the remainder of this year, and hopefully you manage to attain all the long-term targets that you've laid out as well. With that, let's shift focus to our special segment. We get you a few ideas for profit.